One of my students came to me down $2,500, and in a matter of a couple of weeks, I was able to turn him into a profitable trader, and now he's making over a couple $1,000s every single week. All because I gave him a simple blueprint that I'm gonna give you guys in this video. If you guys don't know who I am, I'm Lander, and I've been trading for over 7 years, made over 7 figures in the market, as well as helped hundreds of traders become profitable. And I'm gonna be sharing you guys the exact blueprint that I gave my student Dean to become a profitable trader. And here's his exact journal. As you guys can see, in literally a matter of a couple weeks, we are in a rocky slope right here. Now, the first thing that I saw when he came to me was, if we keep going along this path, if nothing changes, then nothing changes. This is gonna blow his entire account. So the first thing I identified was the risk to reward is fine. The biggest ROI task is to stop this avalanche from continuing. Now, I told him, take a week break, right? The best thing to do is just to reset your mindset a bit. Take a week off, and I'm gonna give you as much information as I can in 1 week time to get this win rate back up. Because as you guys can see, he won 6 and he lost 17 in this time period. That is very bad. So the first thing that I did was I want him to take a week off, reset the mental. The second thing was I identified the biggest ROI task on his journal, which is why I tell you guys it's super important to journal your trades so you guys can identify problems, and then you guys are gonna be able to solve those problems to take your trading to the next step. So for you guys at home, journaling is super important because it will allow you to see problems that you guys might not know existed, and that's how we're able to have actionable steps to take to be able to solve those problems. So for example, Dean's problem is the win rate. For you guys, it might be a risk to reward. So if you continue to do what you're doing right now, you'll continue to be unprofitable because your stats always show it. Dean's problem was the win rate. You guys can see a 26% win rate. That's very bad. Even if your risk reward is really nice, that still has no longevity because this is an easy solvable task that we can give him right now. So what exactly did I do? Well, let's fast forward before I answer that question to his profitable trading right now. So in the last month, he made around $1,900. Now, we have a trade expectancy that is positive now. What are the problems that we solved for him? Well, the first things first, as you guys notice, is the win rate went from 26% all the way to 43%, which is almost double what he was before. I think it's an 80% increase. So we increased his win rate by 80%, 26% to 43%. The other thing you guys can notice is the average win/loss is 2.22, which is not bad at all. It's over a 1 to 2 risk to reward. But the main problem was that trade percent win. And this was for the month of October. Now, you guys can see this is a way healthier P&L chart. So what exactly did I do? I told him after he took that week break, just only focus on one problem. A lot of you guys are focusing on all these separate problems, your risk to reward, your win rate, the trades you guys are taking, what setups you guys are taking. I told him he knows the strategy already. I told him only focus on taking the absolute best trades. Do not focus on the money. Stop thinking about the money. What I want you guys to focus on is just taking the best trades and leaving the rest. I think we tripled his win rate literally following that week. Now, obviously 1 week is not going to solve all of his issues, but that gave him the confidence that he needed to show that there is a system that he can follow, and there's a blueprint that I'm giving him that will make him a profitable trader, because numbers don't lie. I showed him the stats, I showed him the numbers. He sees that it's working real time, and now we need to keep building on that. I'm taking it every single step. I'm getting his stats up to a point where then we can start to scale. So with the win rate's 43%, the next thing that I did after getting his win rate up to an acceptable amount was then focus on the risk to reward. Because if your win rate is lacking as well as your risk to reward, think of it like a bucket that has a hole at the bottom of the bucket. No matter how much water you pour into that bucket, you're always going to have water just leaking out of the bottom, which is not good for scalability issues. The next thing we're focusing on is that risk to reward. So once we get this win rate up, we're focusing on the risk to reward. Now, the way that I trade, we're not making less than 10% per trade. And our average loss is around -5%. Knowing that, we need to be as close as possible to a plus 15% average gain and a -5% average risk. The closer we are, the better, because that is what our stats are telling us is the most profitable for the way that we trade. So that's why I try and get to my students to get to that kind of stats as best as possible, as well as over a 65% win rate. Now, trade expectancy 112.31. I want to make this into R multiples because that's what really matters. I could have a $1,000 position size or a $10,000 position size, and this is going to change, but what's not going to change is R multiples. So what is the formula to make this trade expectancy into an R multiple? Well, we see the average win percentage. We're going to take this I'm just going to round it to 44%. And we're going to times that by my average reward, which is 2.2, which gives us a total of 0.97. And then we're going to minus 56, that's the percent that we lose, right? If we have a win rate of 44%, that means we lose 56% of the time. And we're gonna minus that by 1 because that's our risk. So then we're gonna do 96 or 97 minus 0.56, which gives us a total of 0.41 R, which is amazing. And if you guys don't know, S&P Capital, they set the standard that around 0.4 to 0.6 R expectancy per trade is really great. That's advanced trader stats. Now, as you guys can see, the win rate's 43%. You guys might be like, that's not that profitable. The risk reward really makes up for that, number one. Number two, he's only been trading for a bit now, and we're always going to get better. Profit factor is at 1.7, around 1.8 to 2 is really great. So all of these stats are starting to look better because now we have a positive expectancy. Before, you guys saw it was negative, which means that every dollar he puts in, he's going to lose money. In this case scenario, every trade that he takes, no matter if it's a winner or a loser, every trade will be added plus 41 R to his entire trading P&L. That's very important because it's not about the risk to reward. It's about over time, what does each trade average out to? And if you're close to 0.10 R or under or 0.20 R and under, that's very bad because there's no compounding there whatsoever. So imagine what we do when we get this win rate up. So now let's look into currently. As you guys can see, the last week of October, right? This is where stuff really starts to turn around for him because he's towards the end of the mentorship. Now, what do we notice? Win rate, 50%. I told him his biggest thing he needs to focus on is his average win/loss as well as his win rate. I really wanted him to focus on getting that average win/loss up to around a 3. Why? Because there was so much more upside there than his win rate. As you guys saw, his win rate was 44%. He got it up to 50% just by waiting for the bets to leave the rest. And he got his average win/loss up to 3. How did he do that? Well, we look at the stats, right? His average loss was around -7%. His average gain was around that 15%. And guess what? The biggest problem here was this average loss because our average loss, as you guys know, is -5% and under, which means from -5% to -7%, that's a 40% increase to our losses. And you guys might think that it's only 2% from -5% to -7%. But if you actually do the math, from -5 to -7%, that's a 40% increase added to your losses, which means that your winners will not compound as much as if we get it down to -5%. So that's what I told him is the biggest hole in his bucket right now was his risk. So we're going to get the risk down to -5%, and he's done a great job at doing that. Look at his average loss, -166, and look at his average gain, $586, which is great. He also was able to get his winners up, and he's making his losers a little bit smaller, which is amazing, which allows his winners to really start to compound here. And on top of that, he was able to get his win rate up to 50%. We weren't even really focusing on that, right? Where we were focusing on the average risk to average reward, but he also got his win rate up during that time, which is amazing. As you guys can see, his trade zealot score was 84, trade expectancy 200 with a profit factor of 3.5. Now, let's see exactly what his expectancy is during this time. This gives us a total of 1 R, which is amazing. On average, over time, no matter how many trades he takes, every single trade, he's going to be up 1 R based off compounding. That doesn't mean he's going to win every single trade. That means take all of his trades, average it out. What does he make per trade? 1 R, which is insane. Now, obviously, this is a little bit of a smaller sample size, but I'm showing you guys the progress by tweaking the biggest ROI tasks that need to be solved. Problems are just doors that are blocking you from getting to the next level. Once you're able to solve that problem, then you're able to move on to the next level. You guys have to think about problems in a different aspect because his problem was win rate, then his problem was risk reward, and then his problem was getting both of them up. Now his problem is the win rate a bit. So that's what he needs to focus on next is this win rate and to get this up as high as possible. If we get this to 65%, he's going to be extremely profitable. You guys need to look at problems in a positive way. Problems are the only thing that is stopping you from getting to the next level. So the next thing I told him is now we need constant feedback loops because we have great stats. We need to keep these great stats. Daily journaling, number 1. Number 2, I review all their trades every single week in a weekly performance call. So we all go over everyone's stats and we need to see what everyone needs to focus on. And then I give them actionable steps to take for that next week so they know what to really focus on and what's going to move the needle. And for him is this win rate, taking the best, leaving the rest, as well as keeping this risk to reward. Because a 3.5 risk to reward, it's possible, but the longevity of a 3.5 profit factor is not that high. So obviously he had a great week. Now over time, I want to make sure that this continues to stay at above like 2 profit factor, as well as the win rate stays above 50% and the risk reward to stay over 3. That's very scalable. Then we'll work on scaling his position size. But for right now, if this stays the same after a month, I'm gonna allow him to scale up and take his trading to the next level, and he'll continue to scale up. After he scales up, he's gonna have psychological problems that we'll be able to solve in a week because we have the systems in place to give him the proper feedback to solve those problems and continue to keep scaling up. Now, this guy's in my mentorship. You watching this right now is probably not in my mentorship. So if you guys want access to just the personal journal reviews, one-on-one support, as well as a community of like-minded individuals just like Dean, click the link below, fill out the quiz, book a call with my team, and we'll see if you qualify. And if you do, hope to see you guys on the inside. And if you don't, I have a ton of free stuff that you guys can use that will get you guys to the next level. So then hopefully you guys can join my mentorship in the future. See you guys in the next video.